Welcome, everybody. Welcome to TrendSpider Live. My name is Mike, and today we are going live with Tushar Chande for the Nvidia earnings report. This has been highly anticipated, so thank you so much for joining us today, Tushar. How are you doing?
Very well, thank you. Thank you for inviting me, and welcome everybody. Should be a really fascinating afternoon as Nvidia gets ready to report its earnings data, and I'm sure there's going to be lots and lots of very busy traders and algos this afternoon.
Oh yeah, absolutely. I think this is going to be probably the most anticipated earnings probably of the entire quarter. I mean, the setup is just insane. We have Nvidia has been coiling up in the same range for who knows how long, months. We're going to cover all of it in a second, and it's looking pretty good today. It's breaking up out of its little daily range here. The weekly range is still, pretty coiled up. But yeah, if you guys are out there in the chat, go ahead and say what's up. Thank you all for joining. And yeah, welcome. Just sit back and relax while we break down this live NVIDIA earnings report. Yeah, I know, Tushar, you have a very nice slide deck. If you want to go ahead and show that, we can get right into it, because I think a lot of people are probably curious where, the expectations for NVIDIA are based in this range. So let's see. And we have a lot of other stocks reporting earnings today as well. We got CRM, we got Snow, a couple of software names that have been pretty much slaughtered recently. NVIDIA is holding in really well compared to them.
You want to look at their charts for a second?
Which ones? CRM?
The CRM. So CRM has been trending lower, and the software stock hit, they're bouncing a little bit.
Yeah, and then, this one, it's the chats is super low.
The chat indicator, you see, it's been flat, and then this is the power band indicator with two sigma bands on either side, so it's well below the bands. And then Snow, pretty much the same. Again, the chats indicator is in the red zone, so it's down, and then we're showing this also painting in red. Now we're getting a little bit of a little bit of a bounce here, so and Bitcoin also bounced, so we're looking for some return of the animal spirits.
Yeah.
And then IonQ, same thing. It had the very nice moves up here, but then it's come down again. Possible double bottom depending on how how the earnings show up.
Yeah, very true. Yeah, it's been a pretty good day for the markets overall. Like you said, Bitcoin is bouncing, Nvidia's up 2%. I believe the semiconductor ETF hit new all-time highs today as well. As you can see right here. Yeah, so semi's hitting all-time highs, looking beautiful on the pair band indicator. Has been trending ever since, almost a year, for almost an entire year now.
I mean, if you look at the EWY, it's been really, accelerating to the upside, which is the Samsung and Hynix. So it's the Korean stock market, and then GLW. It's been had 4 amazing days, and then chip stocks have been consolidating a little bit, as you can see, just trying to break out of this downtrend line here. Sandic, about the same. It broke out a little bit, has consolidated. STX,
you're not sharing your screen, Tushar.
Okay.
Here, go ahead and share your screen. But here, let me pull up SNDK. Yeah, because the memory names, a couple, the SNDK is down, I believe, today. MU's down. I think WDC and STX are green. So a little bit of divergence there.
Right. Let me share my screen. You getting it? Okay.
No, I don't see it quite yet. Let me stick this over here too.
Okay, you seeing it now?
There we go. Yep.
Okay, this is the you seeing the screen now?
Yep. Yep. All good.
All right. So this is EWY. This is the Korea ETF, and they have SK Hynix and Samsung as their 2 largest holdings. So memory chip play. So clearly, big breakout, accelerating to the upside. GLW, which had this big contract with Meta for delivering fiber optics, whatever. They're having 4 awesome days. Mu is consolidating. You can see we had the little triangular consolidation is just breaking out. SNDK has broken out a little bit, but is retesting small consolidation, waiting for earnings, I'm sure. from NVIDIA. STX, same thing, sort of, consolidating in this region, again, a triangular consolidation. WDC sideways again. And if you look at, say, CRM, they are, clearly in a downtrend. Snow, downtrend. IonQ, downtrend. And if you look at the hyperscalers who are obviously contributing to the NVIDIA success, they've sold off a bit. Google is the only one that's trending higher, but even that's retesting, the lower band of the power band indicator. Meta, we know, has sold off. It had this big sell-off. Now it made sort of a double bottom, is retesting that. So hopefully it can resume. Microsoft, they've been getting clobbered. We talked about this. If I So I've just put on the 50-day and the 200-day, and I will turn the power band off. So we had a double top here, and then a series of, it's a support at the 200-day moving average, and then a resistance at the 200-day moving average. So now you'd have to think of 50 as the next upside target for Microsoft. So again, unusual to see this pattern, double top and support right along the 200-day moving average. So the institutions are definitely looking at this particular combination. So it's just good to know how the setup is, for your own trading. And Oracle, they've been getting blasted too. So,
Go back actually real quick to Microsoft if you could, because I know I've been seeing it everywhere on social media. If you flip over to the weekly, it should be right around the 200-week moving average as well.
So
right there.
Exactly. So I think there's a very high probability that it'll find support at the 200-week moving average, because again, the institutions are looking at it. And if you see back here in 22, it tested and found support. Again, here tested and found support, tested and found support. So, if you're a long-term investor, and obviously there's be volatility around here, so there's not a guarantee that this is the bottom. But again, you can see that then the trend follow, as a trend follower, you could make the argument that you should just stay out, because we are all the way the chats indicators in red down here. So potentially it could be a downtrend. But again, part of being an investor is being willing to do some counter trend in nibbling, and this certainly would be a reasonable place to think about that.
Yeah, absolutely. There's lots of insider buying at those levels as well for Microsoft, which is good to see also. But
anyway, so and then let me just show you the NVDL daily chart, because I think that also highlights things nicely. So this is the Granite Shares 2x or 2x leveraged ETF. What's interesting is you can see this this red area that I've highlighted here. So it has very strong resistance right around this area where it's at, and today it's broken out. So if we zoom in, today it's just getting ready to test the upper end of the range and possibly break out. So there's still a lot of overhead resistance, as you can see over here, all the way up to 110, 112, something like that. But the next upside resistance will be right here, say in the 103 area, 104 area. So there's still a lot of work to be done technically to break through all this. And obviously, whatever NVIDIA says today in their discussion and commentary would be critical to how the market reacts and whether we can have a little upside action here. But certainly, I think this low is important, because we had a huge sell-off in the market, and they were not able to break through this, by much, and rebounded very rapidly after that. So I still think it's a bullish setup, but it depends on how the short-term boys react to what NVIDIA says.
Of course. Yeah, I love this chart right here.
Should we try the slide package?
Yep. Yeah, let's do it.
Okay. So what I did was I tried to take a big picture view of what is happening as we head into the earnings announcement in a few minutes. And essentially what I wanted to show was that we had this popsicle consolidation on the daily chart, and that's kind of been constraining prices. And then the second part of it was, what do the price projections look like? Because ultimately, this is all about understanding how the current price action fits with potential future estimates. So let's run through that. This is just the usual disclaimer. You can read it at your convenience. Just a reminder, my YouTube channel, you can search for this handle and find it.
It's in the description as well. There's a link to Tushar's YouTube down below if you guys want to check it out.
Thank you. I have quite a few videos there on many different topics, so it'll be just interesting if you're interested. So let's think about an introduction. So we've looked at this chart a little bit, but let's just reorganize, so to speak. So this is daily data for NVIDIA. I've got a 152-day automatic or adaptive regression channel. So essentially linear regression. The center line is a 152-day linear regression. And then this is the two green lines are plus or minus 1 standard deviation. And the dashed yellow lines are plus or minus 2.5 standard deviations. So this is the default setup. And if you just look across, you see that there's a lot of resistance right around the +1 sigma line. And then, of course, when it broke out above, it reversed pretty much right away. And then if you look at the chats indicator, we were down here in the neutral area for this entire consolidation, and we're just beginning to pop into the green area. So, still in a consolidation range. Now, this is the pair of band indicator with the 2x standard deviation or ATR bands. And here, the point is that we know it's consolidating, and you see that it's come up and retested the lower band and now is retesting the upper band. And we need something to push us out of this range. And then this is the Ishan indicator, which is sort of an adaptive RSI alternative. And during this entire breakout that we have painted in green, you see we had values very close to 100. Again, a little bit of a breakout here. We have value close to 100. And then during the consolidation, we haven't really hit 100 yet. So again, momentum is lacking. And we know it's obvious that we're consolidating.
Right.
And then here I put the 50-day SMA and the 200-day SMA. This is what the institutions look at. And you see the two averages are getting close. So one thing to worry about is suppose we get a sell-off here, could at some point in the next few months, we get a downside crossover. So if you get a downside crossover, that's going to affect a lot of institutional positioning, for the rest of the year. So this is something to think about or keep track of. And ideally, the market will rally, so this won't be a factor, but there's something to keep in the back of your mind.
Yeah, and those are the golden and death crosses for you guys that maybe
I mean, there are, again, if you look at these, there are many times you get a crossover and nothing happens, so it's not definitive. But institutions are looking at it, and it's affecting how they feel optimistic or not about the stock.
Yeah.
Now, this is kind of an interesting slide, amusing, but I just wanted to show you. So what I did was I looked at the high and low of the 21-22 decline, and then I used the Fibonacci extension, and I only plotted the ones that sort of didn't clutter the picture. And what's interesting is that we met resistance at the 0.618 extension, if you will, then again at the 2.618 extension, then the 4.236 extension, and now we are just consolidating below the 6.854 extension. So it's fascinating that for whatever reason, these Fibonacci extensions have played a role. And when it pulled back, for example, here, again, it's not quite at the exact extension, but in the general area of the extension. So, who knows what it means exactly, but the next target up would be interesting when we get to it in a minute. So this is just for amusement.
Yeah,
okay.
For sure. When price goes into price discovery mode, it's a pretty nice tool to use because, as you said, it's just kind of a formula, but people probably see it. Institutions might see it.
Looking at it. You can be sure traders are looking at it, and it's kind of interesting that people are trading against those levels. So they're saying maybe I'll get some, you can short against it or whatever.
Right.
The main challenge for NVIDIA that is surrounded by skeptics. I mean, that's the basic problem. So on January 26th, the CEO said that we're in the largest infrastructure build out in human history. Well, what does that mean? Like, if you think of compounded annual growth rates and their revenues, are you going to grow at 25%, 35%, 40%, 50%? That's really the question. And that's the reason for the whole skepticism, because they're already a huge company, and Wall Street just can't believe that they can grow at this phenomenal rate and deliver at the incredible level that they are. Now, this is a collection of headlines that I found, like warning: Nvidia is not cheap. This is from New York Times. Looming Taiwan chip disaster. This is CNBC. Earnings skepticism. So the problem is that Google, Microsoft, Meta, and Amazon, the hyperscaler, they're spending something like 700 billion in 26. And so people are afraid that this is the peak in AI capex spending. Like this can't continue, et cetera, et cetera. I don't know what the answer is, but it's a basis for this enormous skepticism around the Nvidia price.
Mm-hmm.
Now, I really love this chart that I found on Bloomberg, their opening screen. This was after Meta announced their deal with AMD. And on the left-hand side, we have the two other fear factors, the chips, the competing chips, either TPUs or ASICs. And certainly Meta is one of the people making it, but the hyperscalers themselves, the Googles and the Amazons of the world are making their own chips. Microsoft wants their own chip. And inference, that is, so far, the GPUs from NVIDIA have been used primarily for training, but could the inference market be dominated by someone else? So chip competition and inference competition is a big worry. And then we have this generic AI replacement fear, the AI caution lingers, dealing with AI fears. And to me, this is a frozen bull. It snowed in New York City, so they had this picture of this Wall Street bull covered with snow. And NVIDIA has really been a frozen bull for the last 13, 14 weeks, where the prices have been in a very tight trading. So I thought this kind of summarized the state of play very nicely.
Yeah, just comment on that too. I feel like you normally would see these headlines when the market is diving, right? When it's tanking.
Right.
Yeah.
But I think okay, so I heard somebody on TV say, and I sort of agree with them. They said that everyone on Wall Street is thinking linearly, and Nvidia is growing, non-linearly, i.e., exponentially, and people can't really get their hands around it. And I think that may be a reasonable way to look at it, simply because this is not like a 20% growth, and it's like humongous growth with enormous profit margins. Okay, so just thinking of today's report, I think Nvidia is really a victim of his own success. First of all, there's no surprise factor. The short-term traders are dominating. The ATM straddle price is expecting a relatively small move, I would say, of a few percentage points. And they're so closely followed, and people are kind of constantly raising the whisper number, etc. It's very hard for them to beat it in a dramatic way. And then the other problem is that they don't get any credit, no value for their amazing execution and growth. I mean, they have incredible growth potential, and they're executing at a mind-boggling level, producing massively highly engineered products at a very, very fast cadence. And instead of appreciating that, as I showed you, there are like 1,000 different ways to be afraid of. I kind of think of it as flat earthers. People people think that they're going to get to the edge of the AI boom and just fall off the edge, and then there'll be no more Nvidia. And so I think it's like there's a whole psychological. People are just not ready to give them credit for their unbelievable and phenomenal performance. Anyway. So what are the expectations? Around 66 billion for this quarter, maybe 1.52 EPS, maybe right around 75% gross margin. What are the issues for the future for 26 or the calendar year 27? What's going to be the revenue and gross margin? People are expecting revenues anywhere from 300 billion to 350 billion for the next fiscal year, so through January of 27. The sovereign AI, the China sales, physical AI, robots, and so forth. The new chips coming online, the Rubin chips and their CPUs and GPUs. And then this whole inference versus training. Are they losing out on the inference market? But they have this Grok acquisition, which is primarily aimed at inference. So what's the impact of that and so forth? So there's a lot of interest in what they're going to say, not just what they're going to report.
Mm-hmm. Yeah, for sure.
Talking about the Q3 earnings, we'll just go back and see what happened in November to give us some perspective of why we're here today. So they reported great earnings. Everyone is happy. So this is what, at the end of the day, then they announced the earnings, and this was the after-hours action. So it was up like 4% or something. We're happy. But the next few days, the next 4 days, there was a dramatic sell-off. They got crushed. So we have this big bar up. Okay, after earnings, everybody's happy. But the next 4 days, we had a sell-off. So essentially, if you look at those 4 days as a single bar, and if you draw a line, the candle from the high to the close, you basically get this red area, red zone. And then down here, we have the wick. And to me, this looks like a popsicle. And essentially, what these 4 days are doing is they're acting as an outside bar for the extended inside bar that's about to form. So basically, this popsicle has frozen the price action for the next 13 or 14 weeks. So if you think of where we are today, this is where we are today. That was November. That was the after hours action. We had a nice rally, and then the next 4 days. So this 4 days have essentially frozen the price action for the next 13, 14 weeks. So the popsicle is really functioning as an inside bar, and it has frozen the price action. So the big question for us today is, when is this popsicle going to melt? And I think to answer that, we need to kind of know, what do the earnings projections look like? So let's look at that. So these are the price targets. So when I ask Sidekick, hey Sidekick, what's the price target? And it tells me that the median target is around, say, 240, 250. So we'll just use 250 as a round number. So what I did was I looked at the 50-week arch indicator. This is a linear regression, and the default plus minus 1, plus minus 2.5 standard deviation channels or bands that we put on it. And then I essentially just extended these out for 1 year through January. And then this is the analyst target range. So essentially, if you look at just the linear regression fit, and then the plus minus 1 standard deviation, plus minus 2.5 standard deviations, and you project them out, we are right in the middle of the analyst price target range. So essentially, the technical or the arch indicator projection and the analyst projection is converging to basically the same range.
Always good when the technicals and fundamentals align like that.
I know. So I did a next step. I said, okay, I can keep the same price target and have the same range projection, but I did a Fibonacci extension using that high and this low. And sure enough, it amounts to basically a 1.6 or 2.6 extension of the decline we've had, since the most recent high. So again, these numbers are highly reachable in terms of, a Fibonacci extension into the analyst price target. So again, a convergence between, sort of the linear regression projection and the Fibonacci projections and the analyst target. So everything is sort of converging to the same number, about a year from now.
Yeah.
And then I went further back, and this should be months, not weeks. This is my fault. I went back down to the low of October 22, and I said, okay, let me make a arch indicator, the same that we've been using, linear regression, and project it out to 1 year and 2 years. And then this line is, of course, moving at a lower angle. So this predicting $250 a year out, and say $300 close to, say, 2 years out. So again, remember this $300 would be the 1109 extension of the Fibonacci, extension that we're talking about from here. So right now we are at 200, so it's meeting resistance here, and then the next major resistance is at 300. So clearly, again, the 250 to 300 price level is achievable, and it's within the predictions from technical analysis. And of course, the fundamental boys are all agreeing on it. So, we have the conversions, if you will.
Yeah, so everyone's seeing the same thing, basically.
Right.
And then 300.
Right. Plus minus, there's some variation.
Yeah.
And then this way, I said, okay, I'll do my own thing. And I looked at the average of the EPS projections by quarter going out to next January. So for the next fiscal year, so first quarter, second quarter, third quarter, fourth quarter, these are the averages. So of course, there are numbers below this and above this. And I just multiply that by 40 into the trailing 12-month EPS. So whatever the EPS would be, assuming that these numbers are, quote, correct, again, I get a price target in the $250 to $300 range, assuming a 40 times trailing 12-month earning. Now, obviously, it could be a little bit less, could be 35 or 38 or 39. But again, just using straight up what the analysts are doing, they're just making a prediction and then using a multiplier. And I'm using a multiplier on the trailing 12-month earnings rather than the forward P ratio. And I get a number, lo and behold, that's again in the 250 to 300 range that everyone else seems to be in. And potentially, I'm at the little high end of the range if I just assume that the earnings come in as the smart people are projecting. And then here what I did was, okay, I want to go further out, and I just use a simple rule of thumb. I just divided the revenues by 1.1, This is roughly where we are, about 213 billion. And then can we grow at 40%? Can we grow at 30%? I don't really know. But if you go back to his statement about how this is the greatest build out in human history, then I figured 40% would be a reasonable guess. And based on whatever I've read, people are projecting, it's not inconceivable. And so again, that gives us a price like over $700 by 2030, which is, we don't know if it's going to get there. But if you're a long-term investor, at least it gives you, some prediction and something to look forward to as, a potential price target for the future. But what's interesting is if I compare that to the Fibonacci extension, there's a 29 point something extension from the same base that we talked about, the November 21, October 22 base. That puts you at 726, which is sort of the price range in the ballpark of what I would compute, assuming a 40% growth rate. So again, even longer term, you can find some convergence between technical analysis and just fundamental analysis. And of course, we don't know what the growth rate is going to be. So there's obviously sort of a guess, but that gives you a sense for the range that could occur. I find it hard to believe that they're going to grow at like 5% or 10%. I think they're going to grow more than that. But of course, I don't know what the actual value will be.
Of course.
Anyway, to summarize, the price targets are converging in terms of the fundamental analysis and the technical analysis. And then, the basic problem with NVIDIA is that there's no surprise factor. It's very hard for them to beat in a massive way. And people are just not giving them any credit for, absolutely magnificent performance. So that's kind of where we are, at the one signal resistance area. I don't know what the market's going to do today. And then, of course, we're in this frozen popsicle candlestick pattern. And when is that going to melt?
Yep. Yeah, that is the question. We all see the consolidation. We all see the price targets, but, price is going to do what price is going to do. And in just, less than 20 minutes now, we're going to see how the numbers come in. Everyone's expecting them to beat. So who knows? They have to be pretty good, hopefully, to get a breakout to the upside. I think that's what most people in here are hoping for. Hopefully everyone.
Okay, I'm going to stop sharing on my side. So
okay, here, let me get my screen back up over here. Get the NVIDIA chart up. I got the 1 minute chart up right now, but NVIDIA earnings, I don't believe, are supposed to even come out until 20 minutes from now. So until then, we have plenty other earnings that are going to be released that we can probably take a look at while we wait. But somebody was asking about snow. Don't see any numbers yet for snow, but they are kind of moving up here. Let's see, CRM is up 3% in the after hours session. IonQ, yeah, not a whole lot of movement yet. We got Joby reporting so many stocks, even Zoom. Got a couple of the old Kathy Wood stocks reporting, like Zoom and Teladoc as well, TDOC. So Zoom is up pretty good right there in the after hours session. But if you guys are out there, let us know in the chat what you guys are expecting. Would love to see your guys' takes. I did just run a quick Sidekick prompt just so we can break down everything once again and see what good old Sidekick has to say about it. It is saying hold, do not buy, do not sell going into earnings. And it highlighted some recent news. They had the Meta partnership, which is interesting. You're going to be wanting to look into the China export tensions, of course. And they drew out the Michael Burry warning as one of the news events. That's always funny. But yeah, it says the setup is tricky. NVIDIA will likely beat estimates again. Again, everyone is expecting them to beat. It just depends on how much they beat, really. The growth of their revenues and their EPS. So we'll see. We'll see.
And the last few earnings, they've sold off, and I'll show you what happened after November. So, but hopefully it'll be different this time.
Yeah, hopefully we finally pick a direction out of this range.
Well, and we got break out to the upside.
Yeah, I hope so. Sezzle is up 18%. SEZL, by the way, on their earnings. Looks like they just reported, most likely. Not seeing numbers for them yet. NVIDIA still just relaxing, waiting for earnings to come out. Looks like CRM has gotten a little bit of movement. We got 2 minutes until I think a lot of these earnings start coming out. Usually about 5 minutes after the bell. Keep flicking through. Wow. And you had a crazy candle there. Let's see. The trade desk is down 10% right now in the after hours session. Not seeing numbers there yet. Joby is an interesting one. These are like the flying drone transportation stocks. Let's see. But let's pull up NVIDIA again, because I want to start a poll on YouTube to see what the audience is thinking. What is a good question we can ask? Let's go over to the daily chart here, and let's just ask, is NVIDIA going to break, or we'll just ask, is NVIDIA going to have a double beat on earnings? Let me go ahead and start that poll. So start a poll. Does NVIDIA, I'll say, does NVIDIA break above resistance when they report? So vote yes or no. So if you think NVIDIA is going up, vote yes is essentially the question. And I'm curious to see what everyone out there in the audience is thinking as we come into here. So far, we got 100% of people saying yes. If you haven't voted, go ahead and do so. What was that, Tushar?
I think that's, again, I think, they've been in a very tight consolidation. They've come to the top of the range. So, I think, let's hope it breaks to the upside. But, we know we have to wait for the next 2-3 days. It's not enough to just look at what happens after the earnings, and it might take several days to shake out.
Yeah, absolutely. And by the way, we are seeing snow absolutely fly high right now. It's up 13% on the day, 6% in the after hours session. IonQ up 8% in the after hours session. What other big movers we got? Sezzle is up. And yeah, Trade Desk is down pretty good right now on these earnings so far. And if you guys are just tuning in, welcome. If you guys want an in-depth breakdown of the NVIDIA earnings before they come out, you can probably rewind a little bit. Tushar has had a very nice slide deck that we covered. NVIDIA earnings do come out in about 15 minutes. But yeah, make sure you guys like the video and subscribe if you guys are enjoying this breakdown so far. Lots of movement happening right now on my charts. We got Root reporting today. Looks like they're up about 1%. Not seeing a whole lot of numbers. It just struck 5 minutes after the bell. Oh, wow. We got AI, ticker AI, down 23% on the day. Let's take a look at this one here. That is 23. But, it looks like Snow is doing pretty good, which is great for the software.
The daily chart is down here. It has sold off. So this is a good time for a counter trend move, and then sort of a rough double bottom, if you will. So it's perfect. There's enough overhead sort of shorts that will have to cover. So a rally here would be into a lot of shorts that will have to cover.
Yep. If you look at Snow here on the daily chart, you can see pretty much a perfect double bottom seems to be playing out so far. They had their first in early February, second just like yesterday. Right. And on this earnings, they snapped right back up, as you said. A good counter trend move. What would be a good indicator to stick onto this one too, Char?
Let's see. The paraband indicator would be fine, or the pals is fine. Yeah, so paraband tells you that those are the red dots. So until you really get above the trailing stop, you still have to worry about whether the trend has really changed or not.
Right.
And then if you put the blast indicator, you can see that clearly you have a counter trend buy.
Let me see. Let me get the blast one up. Hide the paraband. Oh yeah.
So we still would have to have if you want to be conservative, you wait for a low above the trigger line, the solid line there, and then that'll above that line, and that'll give you sort of a more reliable earning. But clearly, a close above that line would also give you. You'd have to, of course, wait for tomorrow, because you have to wait to see how it ends tomorrow, and that'll give you a more definitive indication. But again, if you're interested in a counter trend move, then you can use the blast model, because it also will give you a trailing stop. So you'll have an entry point and a trailing stop.
Yep. Yeah. So, but good move for the software name right there, which is nice to see. Same, almost exact setup here on IonQ.
Right. They sold off, so now you get a rough double bottom and sort of shorts cover.
Yeah. Let's take a look at the trade desk TTD. I'm gonna put on the paraband for this one. But yeah, it seems like it's just been honestly a nice looking short for quite a while now, ever since it broke down here.
And then if you look at, see, that's why the trailing stop is important, because it kind of went up to the trailing stop and the downtrend resumed.
Yeah.
So that's kind of why that's the value of having a trailing stop as well as having stop discipline, because you want to just wait to see what it's going to do against the stop.
Yep, absolutely. Let me see if we got any of these numbers out yet. Not seeing any for the trade desk yet. Snow, I'm sure the numbers are out. It's just the news desk hasn't reported them just yet. IonQ, same thing, but IonQ, yeah, looking really good. Let's see, Joby is now up 4%. See if you got any updated numbers. No. Zoom, we got down 5%. Let's see how Zoom is doing these days. Looks like it's been pretty flat. No real trend in Zoom. Really even on the weekly even. But interesting move. I mean, it was a beautiful short on the way down in that stage 4 decline right there.
Right. Typically what happened was when the economy recovered after the 2019, as the economy reopened, there was less and less need, and people returned to office and so forth. So the incredible move was during the COVID, because we were all stuck at home.
Yep, exactly. Let's see. Yeah, still calm before the storm for Nvidia. They will come out in about 10 minutes though, you guys. So make sure to stay tuned. Make sure you guys like the video and subscribe. If you're excited to see what Nvidia is going to do, let's check out the poll. Interesting. We got 73% of you guys are saying Nvidia breaks above resistance when they report. If you guys haven't voted yet, vote yes or no. Yes means you think Nvidia is going to finally break above its consolidation range here. You see on the pair band indicator, it's sitting right below it, right in that popsicle formation. So it is really calming for the storm. Wow, IonQ now up 17% on the day. Very nice move there. Let me see if I can find the actual earnings for this. IonQ Q4 2025. It looks like they should be updating the system. Looks like they beat EPS for IonQ by quite a bit, 78% year-over-year growth. But revenue, looks like revenue seems to have come in at 61.89 million for IonQ, which is a over 400% year-over-year growth rate by quarter, and a 53% beat compared to what the analysts were saying. So very nice report there on IonQ. Here's Snowflake. Snowflake beats EPS at 34 cents compared to 27-cent estimate, and sales beat at 1.28 billion versus the 1.25 billion. So a double beat on Snow. Absolutely beautiful revenue chart over here at the top right of my screen. You can see the revenue is up and to the right, beating every single quarter. But at the moment, they actually just gave back all of those gains that they made for the day. Let's see. What else do we got here? We can take a look at AI. Let's see if these numbers are in. I do not see them yet. Okay, but they're down 17%. Interesting. Root. I think Root was trending pretty good at some point. Oh, maybe not. Yeah, Root has an interesting chart, actually. It looks like it's more trending to the downside. But yeah, no numbers in our system yet, at least. And Sezzle, SEZL. This one has been pretty beat down. No numbers there yet, but they are trending very nice. Yeah, CRM. Did we look at? I believe we did look at CRM. Let's see. Yeah, a few seconds ago here, CRM reported a double beat as well. Wow, very nice EPS beat on CRM, which is Salesforce. 3.81 EPS, beating the 3.04 estimate, and sales beat by about 0.3 billion. Let's take a look at the growth rate of CRM. Well, it's only news feed for now, but yeah, double beat, and CRM still down 3% on that. Somebody just said Nvidia pump and dump. Yeah, still not a whole lot of movement here on Nvidia from what I am seeing yet. But some interesting numbers so far. What time is it? We got about 7 minutes until Nvidia should come out and report their numbers. Let's see how it looks on the daily. And if you guys haven't voted yet, let's take a look at the poll. Yeah, 70% of people are saying that they're going to break up and beat resistance. So hopefully that comes true for the overall market's sake. Let's see. What are you guys seeing out there in the chat? Let us know what you guys are seeing. If you guys are seeing anything fun during this after hours session. Yeah, I think everyone's just patiently waiting here for Nvidia still, though. Yeah, Snow, look at that. Had a nice pump that gave back all of its gains. Somebody said Joby had huge numbers. Not seeing them quite yet on my end. Look at this Joby quarter 3. The last quarter for Joby, they came in with 22 million in revenue, up from just $15,000 from quarter 2. So that is an 80,000% change over their $28,000 quarter in quarter 3.
So now does the stock also have to move 80,000%?
Yeah, that is insane. But when your revenue is practically zero, kind of makes sense. See the EPS. EPS though has really not done well at all, which is kind of crazy considering that was a very, very good quarter in revenue for them. You see on the chart over there. But yeah, that was the last quarter. Still not seeing it for this one. Yeah, this guy in the chat, the Bonk Nacho, is saying it's a 55,900% year-over-year increase in revenue for Joby, that is. So I'm assuming he's looking at quarter 4. Yeah, I mean, it's going to be massive, massive growth rates on this one. Let's see. Nvidia's still not moving. What is NU up to? No numbers there, but let's check out. Looks like they're doing pretty good in the after hours. They're up 2% on NU here. Let's see. Is there anything else Sidekick found out about Nvidia? So here's the bear case for all of you guys wondering for AI, like we're kind of talking about earlier. The hidden risk in big tech's 400 plus billion debt binge, they're calling it, for the AI infrastructure they're listing. That's the same thing you were talking about too, Shar. Just, it could be the peak of all of this AI spending that may not last. That is what everyone is thinking, or the bears are thinking at least.
Right. Just like, like we had that, the movie about, build it and they will come, in the sense that, they have to build the infrastructure first before they can sell it, so to speak.
Yeah.
And, the demand is going to be astonishing, and inference is also going to be very token intensive, because, it takes a lot of effort to create the primary frontier model. But when you start using it, then you're going to go, back and forth many, many times. So the consumption of tokens goes up rather than going down. So I think as people, it's sort of the iPhone equivalent. When it first came out, people said, "Oh, that's great," and then people said, "Oh, now what? There's an app for that," but it kind of stalled out. And eventually, more and more people built things for the iPhone ecosystem. And today, you can basically rule the world with it. And I think the same thing will happen in the AI front. It's going to take some time for people to absorb and adapt and create all the new things that will come from it. But we're going to need infrastructure, and how is this going to play out in terms of the user demand versus the need for infrastructure? And many of the infrastructure applications are hardware limited. That is, they could do more if they had more hardware. You have to build it. It is expensive. You have to spend money now. And then you get into the whole, dilemma of are they spending too much, spending too little, and so on.
Yeah. Yeah. Tons and tons of AI spending.
It's a game of survival. I mean, for them, they know that if they don't spend money now and don't build the infrastructure now, they're going to be, left behind. So, for them, it's an existential threat not to have, the best and top-notch infrastructure. And the problem is that you have to build it first, and then they will come, so to speak. And so I think that's where we are. We have to build the infrastructure, and there's going to be lots of grumbling about it while we're in the build-out phase.
Yeah, no, 100%. And things like Microsoft are selling off because they have specific kind of AI risk or tied to like OpenAI, for example. But NVIDIA kind of benefits no matter which, AI model is currently winning, because they're all using the Nvidia chips, whereas Microsoft, they're mostly invested in OpenAI, which is losing billions of dollars, not profitable at all. And then now Google Gemini and Claude has been coming out as the best model, taking over OpenAI. But still, Nvidia really shouldn't be too affected by whichever model is currently the best and is winning. So
and again, it's both inference and training, right? And there's going to be this whole need for compute, as the phrase goes, is literally amazing. They just can't build things out fast enough, but you got to pay for it, and the users have to somehow come up with the money to pay for it, and that's kind of the catch-22 here, in terms of we can't make money until we have the infrastructure, and we can't have infrastructure until we spend the money.
Yeah. So yeah, that's the real risk, is if they spend all this money and it doesn't lead to anywhere profitable. That's what all these analysts are kind of skeptical of. So,
well, the thing is, it's easy. Look, it's easy to criticize the omelet if you don't have to lay the egg. So I think that it's easy to criticize all these decisions. These guys at Google and Meta and everything else, they have to sit and make the decision and put out the hard cash and take the risk. And it's very easy for somebody that's not taking the risk to say that, well, whatever. But it's much harder to be in their shoes, to lay out these massive amounts of money and wait for all the infrastructure to be built up.
Yep, absolutely. And it just struck 20 minutes after the bell. So
we're seeing something pretty soon here.
Yeah, the numbers should be coming out any moment now. Not seeing them on my end, not even seeing the price of the stock moving yet, which means that
a little bit of movement around 196.
Yep. Trading at 196.70 here on Nvidia, as the numbers should be getting released any second now. Double check over here. There's a new 1 minute candle, so it's a minute after. Maybe they are pushing it off a little bit, which would be interesting.
There's no reason to. I mean, I don't know why they would. But.
Yeah, no numbers yet, but we're going to stay on top of it and find the numbers as they release here. Checking some other sources. Yeah, no, not seeing anything. Believe me, once these numbers come in, the price will definitely probably be moving. So
yeah, we'll see it on the 1 minute chart almost immediately.
Yeah, oh yeah. Absolutely. Let's see. Let's check out the poll. So yeah, now we got 66% of people saying that Nvidia is going to break above resistance. If you guys haven't voted yet, make sure you go to the YouTube poll and give your vote, because we should be getting a movement hopefully any second now on Nvidia. And so far, 67% of you guys out there in the audience are expecting Nvidia to move up and break its resistance to the upside. Let's see. Yeah, more positive moves than downside moves so far. IonQ still holding up around 12%. Green for the day. Roots up 16%. Even Teldoc's up 3%. The ticker AI is down 16%, and the trade desk still sitting down at minus 14%. Yeah, somebody said Snow is reversing. Wow. Yeah, so Snow did have a good move for a second, but that did not last very long.
Is it fair to say that they're flaking out?
Yeah, they're flaking out. Absolutely. Look at the daily chart here. Just got absolutely crushed right there. Go back to Nvidia. It says Nvidia on the Thinkorswim shows 1.452. Had an interesting candle here on Nvidia.
Still not moving much, so the numbers not hit yet.
They must have not released yet. There's no way, because I mean that was an interesting candle, but I feel like we're going to get a way bigger move than that once the numbers get released here. And the earnings call for Nvidia does start at 2 p.m. Pacific Standard Time or 5 p.m. Eastern Time. It looks like I'm seeing news of Salesforce CRM announcing a share or a $50 billion increase to its share buyback program.
Wow.
Which is great news for them. But yeah, CRM is flat on the day still. It's how badly software has been beat up lately. But if you guys are just joining in, welcome. We are just patiently awaiting these NVIDIA earnings numbers to be released. If you guys haven't yet, make sure you subscribe and like this video. And also check out Tushar's YouTube in the description down below. I have it linked. He has tons of great indicators here on the platform and a great YouTube channel.
Now we have numbers?
Maybe. Not seeing them.
So bouncing around more.
Yeah, it's bouncing around this 196 to 197 level. Currently coming down a bit here. Wow. Still no numbers. They might be coming out in maybe 5 minutes. They were supposed to come out already.
Right.
In Wix here on the 1 minute chart. It really is the calm before the storm. Let me see what else is trending today. Trade Desk, GSAT, Snow. Snow looks like probably came up just a tad, up about 2% on the day now. Still waiting for Nvidia. Take patiently waiting. Jensen is out here making us wait for this. What else do we got? Any other big movers? I want to, flip around and see what else is going on, but I don't want to miss this Nvidia move. Let's see what the recent news here on Nvidia is from Sidekick while we wait.
I don't see it.
Yeah, just a multi-year deal with Meta announced a couple of weeks ago, about like 8 days ago on 2/17, which is great news for Nvidia. It's like Blackwell momentum, new customers like Wave, partnerships in India for Blackwell. And then, yeah, also AMD secured a $100 billion Meta deal as well, which sent AMD up the other day too. So definitely have some potential competition there from AMD.
Right, but AMD pulled back today, so didn't quite follow through on yesterday's news.
Yeah.
But it stalled out today.
Yeah, it really is hard to compete with Nvidia for these other chip makers.
Since they have this CUDA software, all the other people are doing woulda, shoulda.
Yeah.
They just have not kept up with them.
Yeah. Somebody in the chat was asking what indicator are the red dots that I have showing. That is the paraband indicator. It's Tushar Chande's indicator. Let me go ahead and find the link for you guys so you guys can check them all out. But if you just look up Tushar Chande indicators on TrendSpider, it will pop up on Google. Because
the red dots are basically parabolic trailing stop, where it uses the same or similar logic to the parabolic indicator. but obviously we have to control the starting point and we have to control the acceleration point and the ending point. So, which means that you can't really use a parabolic indicator as it is in the literature. But basically, these are accelerating stops that move faster and faster the longer you're in the trade. So essentially, and they always move towards the maximum price. So you're inevitably going to hit the price rather than it flattening out. So it's a philosophical issue whether you want the trading stock to flatten out as it approaches the high price, or do you want it to keep accelerating towards the high price? So in this case, the parabolic keeps accelerating towards the extreme price. So you're sooner or later going to, to be stopped out, so to speak. And so it's a different philosophy, but essentially it's a parabolic stop and reverse inspired stop. The nice thing is it's integrated with the bands. So for the short side, it starts at the upper band, and for the long trade, it starts on the lower band. So and even if you change the width of the band, the starting point will move with the band. So in effect, you've integrated the parabolic accelerating stop or idea with the idea of a band, and the two move together. So you always have an integrated solution to the entry and exit points.
Right. Yeah, it's a trend following trailing stop essentially. So basically, whenever it flips to a short position, the dots will start painting here, and then it continues to go towards the price until you eventually get trailing stops out. And yeah, it's available here on the TrendSpider platform. You can customize its settings. You can change the speed of the trailing stops. You can hide, the shorts if you only want to use it on the long side.
Right.
Very nice indicator.
And the paraband indicator comes with 5 speeds. And if you want to experiment with more speeds, you can use the paraband plus indicator, where you can have as many different types of speeds as you want. This is sort of obviously selecting a speed is a little bit random, a little bit hard. So I'm giving you 5 speeds, which are, I think reasonable for the average investor trying to, do some trend following on a daily time frame.
Yep. And somebody is also asking about the news window right here. That is just a default, component here of the TrendSpider platform. Oh, here we go. We're getting some movement. You're getting some nice movement up here. Finally, getting some movement up on Nvidia. Currently, was up about 2.5%. The numbers definitely seem to have dropped. Let's see if we can find them. But so far, not even that crazy of a move. We're up about 1%. And it seems to have...
Remember the ATM option was saying basically a $2 to $4 move.
That is not a lot, is it?
It's not that much, for a gigantic stock.
Yeah, no. Especially with how tight it's been coiled up. Might have been a good idea, who knows, to buy that straddle, if you're expecting it to have a big move.
Yeah, but it's not that worth it because it's only like a relatively small move. So.
Yep. Somebody just asked in the comments, what scanner do you recommend for identifying stocks with a new relative strength high? Honestly, the chats indicator is a great one. It's a little bit more in depth than like just their traditional relative strength, because it's absolute strength, right, Tushar? So it's measuring
trend strength. So yeah, I think last time you can either look for strength versus the market, or you can look for the strength in the chart itself. So the chats indicator looks for the strength of the chart itself, looking at many different technical indicators. So ideally, you can just do a scan with the chats, or as you showed us last time, you can do relative performance plus chats. And I think if you do relative performance plus chats, you can really find just about anything that's moving significantly in the market. And if you remember, it's broken out to the upside. It's above the popsicle pattern, trading range of the high was 198.47 thereabouts. Now we're at 200, 201. So I think we've sort of melted the popsicle, if you will. Do you mind if I just share my screen for a second?
Real quick. The numbers just came out. Let me just read them out.
Right. Let's wait for you to finish. if you just put the daily data on, and you can see that we've broken out,
Here we go.
in the we've broken out above the upper band, if you will, and the pair band indicator, which is 2x band. So we've broken out
Beautiful.
Out of this consolidation region. But of course, we're going to need follow through. This is still after hours. We need to make sure tomorrow we'll get continued follow through in the daytime tomorrow, day session tomorrow, and then ideally on Friday we'll also close outside the bands. So now we'll have some follow through action, and then I think we can look forward to a bigger move.
Yep, and yeah, they did report a double beat, you guys. Nvidia, the EPS came in at $1.62, beating the $1.53 estimate. And sales beat at 68 billion, beating $66 billion estimate. And,
excellent.
Yep.
So the Whisper number was at $1.59. So they were significantly higher than even the Whisper number.
Nice. Yeah. Wonder how much growth rate that is. Here we got some more news here. Let's see. Oh, here's some forward guidance. They see Q1 sales from 76 to 79 billion versus 71 billion estimate. So good forward guidance as well.
Excellent.
Tushar, do you want me to put your screen up?
Sure. Give me a second.
Yeah, no worries. I just thought you had something. It's all good. But we also have this new one. It looks like Nvidia CFO says will pay its next quarterly cash dividend of 1 cent per share on April 1st. Interesting. But so far up 4% in this after hours session on Nvidia. Very, very nice.
Okay, I'll just share mine briefly. So this is what we were talking about in terms of the candlestick pattern or the popsicle pattern. We got this is last time's earnings, and then this was the sell-off, and we're using the 4-day sell-off as the outside bar, and all of this was the inside bar. All of this action was the inside bar, and now we have a breakout outside the high of that popsicle pattern. So we are breaking out outside the outside bar, and so that's a good sign. We talked about how we retested the bottom of that price band, and then we came up very quickly, and now we were near the upper end of the range. So I think we need some more follow through here for the next couple of days at least. Then we can be sure that it'll melt down, but we need some follow through to make sure. But I think it's really great that we're able to at least punch through it initially, and now we'll try to follow through over the next several days. And the chats are also rising, so hopefully we'll have on the chats we'll get to a high value. Let's just look at the Ishan indicator and see where that's going. The Ishan indicator is still it has a lag, so it's not quite hit 100 yet. So we're still we just means that we need a little more follow through, as I've been talking about. And remember, this is just for the earnings. We will have their discussion starting at, say, in another half an hour or less than half an hour, and then that's also going to affect the trading, tonight and tomorrow. Okay, I'm going to stop sharing, and you can have your side of it.
Okay, cool. Let me throw my screen up. Yeah, but Nvidia holding up about 3% in the after hours session. Interesting. Nvidia's CFO, this news came in, says Q4 gaming revenue is down 13%, which is, I think, a pretty small part of the revenue, but that's still interesting.
Right. Part of the problem on the gaming side is that there's a memory constraint. And so I think it's hard to build all those consoles out because it's hard to get the memory.
Yeah. And that's where, the flying high Micron and SanDisk are coming in.
Exactly.
Yeah, I wonder what those guys are up to right now. Let's take a look at Micron in the after hours session. Micron is also up about 1%. Let's check out SanDisk. Up about 1%. Seagate. Ooh, Seagate up about 1%. So memory names are getting some good movement on this print as well, which is always fun to see. But yeah, so far, broke out to the upside. It's looking pretty good. If we go to the daily chart here, we closed at 195.56, and we're currently at 202. So we should have a power gap to the upside. Do you ever trade, or do you have any opinions on like power earnings gaps, Tushar?
Yes, there's something called a volatility breakout. And so you can use a multiple of the average true range. You can take 10 days or 20 days or whatever number you're happy with and add that to the previous day's high, or say today's high for tomorrow. And then you can say that in order to be a reasonable move up, I need at least a 1x or 2x ATR move in order to feel like there's enough momentum. So essentially, you can have what I would treat as a volatility breakout. And I have a system based on that on some of my other packages. So it's strictly a matter of setting what ATR multiple you feel is reasonable. Of course, if the multiple is very low, then you get lots of signals. If it's too high, you'll never get a signal. But a 2 to 3 ATR is reasonable, and it's it's certainly possible to see those.
Yeah. So when you say 2 to 3 times ATR, you're looking for at least that move to consider it like a good gap play.
Or let's look at one ATR just as a reference. And suppose today's high is say $100, and then the ATR is $10. Then tomorrow you'd like it to trade above 110 for it to for you to believe that it's a reasonable move up. Now, obviously, for say someone like when you had this big sell-off in IonQ or something like that, the ATR has already been inflated because of the move down, and because it's a counter trend entry, you might want to use 2 ATRs just to give you a bit of a filter. So that's how I would use it. So you add the multiple of ATR to today's high to get an entry point for tomorrow.
Okay, yeah, that makes sense. So we'll see. It looks like Nvidia is up about 3.6% in this after-hours session right now. Let's see if there's any other news here. Just gaming revenue down 13%. But I mean, it was a great report from what I'm seeing.
A fantastic report, because even the initial prediction was 1.52 for EPS, and then the whisper number was 1.59, and they came in at 1.63, right? If I remember correctly.
Yep, 1.62.
62. So that's a big movement up from and what was their profit margin? I don't know what I couldn't see that.
I don't know if we
that
have
a big
that.
hang up. Maybe they were expecting around 74, rather 75%, 74.8, something like that.
Okay, so I see this. They have an outlook for their margins. They're expected to be about 75%.
That's really great, because imagine with all the thing you have to remember is that memory costs have gone up, and gone up bigly. So that has a significant impact on their profit margins. For them to be able to maintain the profit margin that they were doing last year or this fiscal year, even with higher memory prices, means they've got to cut costs or processes somewhere else. So that's pretty good, actually, to be able to maintain margins even with the increasing memory costs.
Yeah, no, absolutely. Let's see. So great report all around. Good forward guidance. Now we're just waiting for Jensen himself to come out on the earnings call, and investors will just listen to what he has to say, do a Q&A. I can go ahead and stream that for us once it starts. We still got about 18 minutes. So for all you guys still out there waiting for that call to come on, if you guys have any questions for Tushar while he's here, or me, or about the TrendSpider platform, you can feel free to let us know. We'll just be watching the markets here until the call starts. So let us know down in the chat what your guys' thoughts are on this NVIDIA number. Any other stocks that you're looking at as well. Doesn't matter. Looks like Vici reported. I believe this is a real estate company of some sort. Let's take a look at this on the daily. Yeah. They were trying to pop up and start a new long-term uptrend here, but looks like earnings kind of shot them right back down. Realty income reported yesterday as well, down a little bit today, but still in a pretty good trend. Overall, the real estate sector has been doing good. Somebody is asking about thoughts on VELO and 3D printing. I actually don't know much about this one. Let's take a look. Wow, that is an interesting chart. That does not look very good. There's not a ton of data here on VELO, but so far, I mean, the trend is down. I would personally stay away from something like that. But I don't know much about their fundamentals in general, other than their 1 quarter of revenue, which looks like it came in at like 13 million. They're not profitable at negative 0.54 EPS. Let's see. someone said TSM. Oh, it's Mike Cohen. Said TSM is surging in after hours. Yeah,
Yes,
up 1%.
Yeah, because again, they are the primary customer. Could you just put, and they were already rallying to a new high. Could you just show NVDL for a second?
Yeah.
Because that's just the leverage version of Nvidia. So you can see that here the breakout is more evident and the most significant in the sense that the leveraging is just magnifying the move, so we get a better sense for what's happening. And
yeah, no, it's nice. Yeah, you had that level drawn right here.
Right,
Very clean.
Right. So, if I just briefly share my side of the screen for just 1 second.
Let me get you up.
So here, this is NVDL, and I had drawn this window before, and you can see that going back for the last several months, we've had this barrier where it just sort of failed to cross that barrier. And today we had at least for now, we have a very decent and solid breakout well above this consolidation region. And now we're talking about sort of the next level of resistance up to the 103, 104 area. So I think this chart is interesting because it's magnifying the amplitude of the move, so we can see it more clearly. And especially since the last report, it's in November, you see that we've hardly had any move above 95. So it's failed decisively every time it got up to the 95 level. And now we've finally broken out. We even crossed 100. We're at 98 or whatever. So I think it's encouraging, though, of course, we have to go through their discussion of the earnings and wait to see what the follow-on is tomorrow. But I'd say it's a good start to the post-earnings trading.
Yeah, no, agreed. 100%.
Okay, I'll send it back to you. Okay. And just let's look at AMD. So AMD again didn't follow through here. For example, yesterday they had a big pop. Today they didn't quite follow through. And then if you look at, let's just put TSM here. So the nice thing about TSM is they've been trending higher, and they were probably an early clue about what to expect from the Nvidia report because of course they build the chips for Nvidia.
Right. Yeah, TSM is a pretty good AI play. They've been trending really nicely. They're on the daily chart.
And they consolidated as well, but they consolidated slightly before Nvidia always. So there's some time lag, if you will. Yeah. Okay, I'll give it back to you.
Okay. Let me see. Let me get my screen back up. Someone also asked about AXTI. This is a beautiful trend. Beautiful trend here on AXTI. This is the weekly chart. If you flip back to the daily, it's also same thing. Nice. Really nice. You can see the trailing stops with the pair band indicator right here. Let me hide this real quick. You definitely could have caught some pretty good upside moves here. Like you went along like here from 247 to 4. That's like a 2x. Here from 5 to wow, it's like 12. It's another 100% or so, a little bit more than 100%. Maybe like a break even here, and then you're back in a new trend. So I mean, yeah, AXTI, if you're in, just set your trailing stop and enjoy, right?
Oh, absolutely. Those are the best kind of trades where it just keeps going higher.
Oh, it's amazing, isn't it? It's so, yeah, that's the best thing about trend following is when you pick that right trend, and it's just every day, it's just the beautiful move up. That's like,
it's always a nice feeling when the market confirms you're a genius.
Yeah. Yep. It does suck, getting stopped out sometimes on the way up, but
well, then you go to the weekly data, right? If you believe the trend is high, you'd still be long on the weekly data. So there's always this give and take between what the time frame should be.
Yep. 100%. And yeah, it's always going to be impossible to time the top, but yeah, you can capture a good amount of these trends using these indicators and just trend following in general.
You can see on the weekly data, the chats indicator was 100. So usually the chats going to the 100 level on the weekly data is actually tremendously important. And you can use that as a scanning tool to find trading opportunities because you want to be, because that's telling you that the long-term momentum is strongly higher. So anytime you can get chats to reach 100 on weekly data, it's a sign of a very strong uptrend.
Let's do it with a quick scan here. Some people are asking about a scan earlier. We'll do a chat scan greater than or equal. Let's just do 99. See if anything in the S&P 100. We actually have a lot on the weekly.
Yeah, on the weekly you'll find many. And if you just click on them, you'll see that it makes sense.
Yeah. No, absolutely. You click through all these, you can see they're all
is trending higher, right?
What was that?
No, you click on any of them, you see that the indicator makes sense. If you just click on a 5 or 6 of them randomly, it confirms why you should be at 100. Your eyeball test will confirm what the number is telling you.
Yep. Yeah, 100%. A lot of energy names. You got Exxon, CVX, and industrials like CAT, some defense.
Defense, LMT.
Yep. Even J&J is in there, which is interesting.
Yeah, the healthcare sector was sort of a defensive counter, and of course value, blah, blah. But they've been trending so beautifully.
Yeah.
It certainly put a Band-Aid on your portfolio if you had a position on that.
Yeah. That's actually a good question. Somebody asked for you, Tushar, how are you getting those category breaks in your watch list? I noticed you had them.
Oh, how? I'm just putting like a left bracket and then 4 or 5 dashes and the right bracket.
So you just add it in there like a ticker?
I'm editing it physically. No, you have to put in a bracket, otherwise it doesn't work.
Okay. Oh, I didn't realize that actually worked like that. That's really cool, actually. Yeah. You can just add that.
Proof, I just kept trying different things until something worked.
That's cool.
I find it helpful because otherwise, it's easier to organize a list if I can put a break in there.
Yeah, no, for sure. Let's run the same scan through the semiconductor ETF since it's hitting new all-time highs.
It should all be at 100.
Pretty much, right? We got, Micron in here. AMAT has been killing it.
Yeah.
I'm in that one myself.
ADI has moved well, and TER has been just on a tear.
TER has been insane. Yeah. A lot of talk. TSM, of course. Was it Lam Research? So many good names.
Yeah, and again, you don't have to guess. Pick one of these that you like and put in your trailing stop and see what happens.
Yeah, for sure. Absolutely.
I mean, you're trying to outguess the market, just wait.
Yeah. Nvidia here, we're potentially probably starting a new trend to the upside, hopefully.
Again, as we said, the whole analyst community is mostly almost massively bullish. They're talking of numbers on the order of 250 to 300, maybe a little bit higher. And then most likely they're going to outperform. NVIDIA is going to outperform what the analysts are expecting. So ideally, it should move higher from here. But, we need follow through and the usual, caveats.
Yeah, anything can happen. I mean, the earnings call starts in 9 minutes. Never know. They could say one thing and it sends the stock down. But so far, it's looking good. So far, it is looking good. And yeah, I'll probably get that earnings call started. If you guys are still around, make sure you guys subscribe and like the video. If you guys want to see the earnings call, let me know down in the chat below as well. And I can go ahead and stream the earnings call for us. Someone said IonQ. Yeah, IonQ is up really good. Top winners seem to be Sezzle, Root, and IonQ, followed by Joby and Nvidia for this this day of earnings. Top losers, the Trade Desk and AI are all the way down there. Pretty rough earnings report for them. But yeah, someone asked, what is a good entry point for? It depends what you're looking at. But Tushar, I've asked you a few times in the past too, is like, if you've already, like, you're looking at some of these stocks, right? Like ADI, the trend has already been going on for so long. So what would you wait for a pullback here to get in some of these names, or?
So there are two different approaches you can take. The first approach is just buy tomorrow. Suppose you want to buy 10 shares. I'm just picking a number. You can just go ahead and buy 10 shares tomorrow and put in your stop and you're done. You don't have to think about it.
Yeah.
Then the other thing you can do, you can wait for a pullback. But then are you sure that you're going to buy the pullback? Then you're going to put a GTC buy order, which says that buy on whatever XXX price for 60 days. And then you're committed to buying X number of units. So I tend to just buy at the open, and then I'm in. I don't think about it. And of course, you can remember, I can give you 10 instances where I got in and it reversed and stopped me out, and I felt, whoa, what an idiot. And I've got 10 instances where it kept going. I said, oh, well, I'm the best. So you don't know what's going to happen, so you're going to be sort of a little bit at the market's mercy. You can wait for a pullback, but the pullback may not come for a long time. And then when the pullback comes, you may not actually execute the trade. There's so many variables. So the short answer is, if you really, really want it, just get in and put in your stop. And of course, you have to adjust your risk parameters. So if you're far above the trailing stop, you buy a proportionally smaller position, et cetera, et cetera. So, you can scale it with the how far away you are from the stop in order to, size your position.
No, that's a great insight. The farther it away is above, your original entry or the trailing stop, you can use a smaller position size just to, be a little bit more careful. And then if it does pull back, maybe, scale in a little bit, right?
Right. Or you can say you can just put in a GTC order, say 5% below the highest price. So whatever number, or the 5-day moving average or the 10-day moving average, and then you have to wait to see whether you get a fill or not.
Yep. And it's really just that easy, guys. I mean, on TrendSpider, we make it so easy. I mean, we have already the chats indicator, you got relative performance. You just scan for these names. You can scan through the semiconductors. I mean, I just pulled up a list of a bunch of beautiful trends right here. And, as you were saying, you just get in them, set your trailing stop loss, and just respect the stop loss. I mean, you're going to probably lose in trend following like half your trades, right? 50%, which is fine because your risk to reward is going to greatly over the long term work with a 50% or even lower win rate,
Yeah, it depends on the ratio of your average winning trade divided by the average losing trade. So the higher your winning trade versus losing trade, the relatively lower percentage of profitable trades you can have. And so we can do the math sometime on one of the future podcasts or whatever, where you can see how it works. But this is an ongoing problem. The trend started, 3 months ago. Do you want to get in or not? So this is a problem that everyone has to deal with.
Yep, 100%. It's good questions though, and it really can be hard to just hop into these trends.
I think of it like suppose it's like jumping onto a train that's already leaving the station. As a child, I did that a lot. I just hop on and off trains that are already in motion. So now you got to decide. Okay, I got to hop on. All right, you're in.
Yep. And then once you're in, you just have as long as you have your risk parameters set, your stop loss, then you'll be ultimately fine. I mean, you're going to have some drawdowns here and there, of course. There's going to be down markets where the market is not trending or chopping, but generally, that's really all it is, running these scanners, finding strength, and, respecting your system, your stop losses, using these indicators, and not deviating from it. Wow, AI. Absolutely brutal down day. So on trade desk, beautiful, even to the downside. I don't really short stocks really for the most part ever, but beautiful potential short opportunity there on the trade desk. Somebody said waiting for Google to go under 300. Yeah, I mean, Google has been kind of losing its trend. Actually popped down to almost a downtrend not that long ago. So
yeah, now it's in a downtrend by the indicator as it's set up now. You have to wait for the red dots to kind of the prices to move past above the trailing stop for it to reverse directions.
Yeah, if you're on the weekly, I mean, you technically could use this too. Yeah. But yeah, guys, we got just about 3 minutes for this earnings call to start. If you have any final questions, let us know now because I'll just probably go ahead and play this NVIDIA earnings call in just a few minutes for you guys to listen in and watch the chart and see what happens here. If you guys haven't already, make sure you guys subscribe. We have Tushar on all the time and many other guests, so definitely want to tune back in for more lives.
And then the beginning of the presentation today, I went through a deck of slides. So if you just go back to the beginning of the show, you'll find the slides and they give you some interesting perspective on price targets and so on.
Yep. You can easily just go ahead and rewind and take a look at all of that for sure. Let's see. Wow, IonQ now at 15%. Well, yeah, pretty good move on IonQ. Yeah, Rocket Lab does report tomorrow. RKLB seems to kind of has lost its uptrend, but on the weekly, it's still in a pretty good uptrend.
So now this has been an example of where if it meets but the chats are not at 100. You can see the chat has pulled back as the prices have pulled back.
Yeah, it's down there like 62. So momentum is definitely fading on the rocket. So yeah, probably better setups if you're a trend follower.
As we showed on the scan for the semiconductor names, right? There's so many uptrends. I won't even bother with something that's not really trending strongly.
Yeah, you can go through semiconductors. Industrials, I think, are still doing pretty good.
Right.
Like CAT, like we said earlier. What else?
ATI.
Yeah, ATI. That's one. Huh,
also had a ridiculous trend.
Beautiful one there. Yeah, I've been stuck in this dilemma. This one has been on my radar for a while, and I mean, how you gonna buy? All this.
Buy the market and be done.
Yeah, I kind of missed out on that one, but yeah, I've been looking at VICR lately. This one just started kind of a new reemergence of its uptrend after earnings. FN has been another one that's been on my radar. Pretty recent breakout. HII, I think I've been looking at. All kind of recent.
Yeah, they're a big defense contractor, Navy.
Yeah, and this one appears in the chat. So yeah, the chat's weekly is at 99 or higher. So that's good.
Right.
Oh, I'm in HWM as well. This one's been really nice too.
All right. Yeah. Again, also defense exposure.
Yep. Beautiful chats rating there. But yeah, it is 2 p.m. Let me see if this earnings. Okay. Yeah, the earnings call is starting. So let me mute this for a second. But yeah, thank you again so much, Tushar, for joining. I'm going to go ahead and play the NVIDIA earnings call. But yeah, thank you so much.
Thanks, everybody.
Yep. Thank you, guys. All right. See you, Tushar. I'll see you next time.
All right. Thanks. Bye. Bye.
Bye. Okay, let me get my audio. And the NVIDIA call.
Fourth quarter of fiscal 2026. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. Our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the first quarter of fiscal 2027.
For me.
The content of today's call is NVIDIA's property. It can't be reproduced or transcribed without our prior written consent. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of significant risks and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent Forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, February 25th, 2026, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. With that, let me turn the call over to Colette.
Thanks, Toshiya. We delivered another outstanding quarter with record revenue, operating income, and free cash flow. Total revenue of $68 billion was up 73% year over year, accelerating from Q3. Growth on a sequential basis was also a record as we added $11 billion in data center revenue across a diverse and expanding set of customers, including cloud providers, hyperscalers, AI model makers, enterprises, and sovereign nations. Demand for our Blackwell architecture, extreme co-designed at data center scale, continues to strengthen as inference deployments grow, in addition to training. The transition to accelerated computing and the infusion of AI across existing hyperscale workloads continue to fuel our growth. Agentic and physical AI applications built on increasingly smarter and multimodal models are beginning to drive our financial performance. On a full year basis, data center generated revenue of $194 billion, up 68% year over year. We have now scaled our data center business by nearly 13x since the emergence of ChatGPT in fiscal 2023. We look ahead, we expect sequential revenue growth throughout calendar 2026, exceeding what was included in the $500 billion Blackwell and Rubin revenue opportunity we shared last year. We believe we have inventory and supply commitments in place to address future demand, including shipments extending into calendar 2027. Every data center is power constrained. Customers make critical architectural decisions based on performance per watt, given these constraints and the need to maximize AI factory revenue. SemiAnalysis declared Nvidia Inference King, as recent results from Inference X reinforced our inference leadership, with GB300 NVL72 achieving up to 50x performance per watt and 35x lower cost per token compared with Hopper. And continuous optimization of CUDA software helped deliver up to 5 times better performance on GB200 NVL72 just within 4 months. NVIDIA produces the lowest cost per token, and data centers running on NVIDIA generate the highest revenues. Our pace of innovation, particularly at our scale, is unmatched, fueled by an annual R&D budget approaching $20 billion and our ability to extreme co-design across compute and networking across chips, systems, algorithms, and softwares. We intend to deliver X factor leaps in performance per watt every generation and extend our leadership position over the long term. Q4 data center revenue of $62 billion increased 75% year over year and 22% sequentially, driven primarily by sustained strength in Blackwell and the Blackwell Ultra ramp. With NVIDIA infrastructure in high demand, even Hopper and much of the 6-year-old Ampere-based products are sold out in the cloud. Nearly a year has passed since the release of our Grace Blackwell NVL72 systems. Today, nearly 9 gigawatts of infrastructure on Blackwell are deployed and consumed by the major cloud service providers, hyperscalers, AI model makers, and enterprises. Networking, a cornerstone of our data center scale infrastructure offering, was a standout this quarter, generating $11 billion in revenue, up more than 3.5x year over year. Demand for our scale up and scale out technologies reached record levels, both growing double digits sequentially, driven by strong adoption of NVLink, Spectrum-X Ethernet, and InfiniBand. On a year-over-year basis, growth was driven primarily by NVLink 72 scale-up switches, as Grace Blackwell systems accounted for roughly 2/3 of data center revenue in the quarter. NVLink scale-up fabric has revolutionized computing and demonstrates the power of extreme co-design across all of the chips of the supercomputer and the full stack. In Q4, we announced that we will enable AWS with NVLink to integrate with their custom silicon. Momentum is strong with our Spectrum-X Ethernet scale-up and scale-across networking as customers work to unify distributed data centers into integrated gigascale AI factories. For the full year, our networking business exceeded $31 billion in revenue, up more than 10x compared to fiscal 2021, the year we acquired Mellanox. Our demand profile is broad, diverse, and expanding beyond just chatbots. First, there is a fundamental platform shift from classical machine learning to generative AI. Strong evidence of ROI as hyperscalers upgrade massive traditional workloads to generative AI, including search, ad generation, and content recommender systems, is encouraging our largest customers to accelerate their capital spending. For example, at Meta, advancements in their GEM model drove a 3.5 increase in ad clicks on Facebook and more than 1% gain in conversations on Instagram, translating into meaningful revenue growth. With the same NVIDIA infrastructure, Meta Superintelligence Labs can train and deploy their frontier agentic AI systems. Frontier agentic systems have reached an inflection point. Claude Code, Claude Cowork, and OpenAI Codex have achieved useful intelligence. Adoption is skyrocketing, and tokens are profitable, driving extreme urgency to scale up compute. Compute directly translates to intelligence and revenue growth. Analyst expectations for 2026 CapEx across the top 5 cloud providers and hyperscalers, who collectively account for a little over 50% of our data center revenue, are up nearly $120 billion since the start of the year and approaching $700 billion. We continue to expect the transition of classic data center workloads to GPU accelerated computing and the use of AI to enhance today's hyperscale workloads and contribute toward roughly half of our long-term opportunity. Every country will build and operate some parts of its AI infrastructure, just like with electricity and internet today. In fiscal year 2026, our sovereign AI business more than tripled year over year and over $30 billion, driven primarily by customers based in Canada, France, the Netherlands, Singapore, and the UK. Over the long run, we expect our sovereign opportunity to grow at least in line with the AI infrastructure market, as countries spend on AI proportional to their GDP. While small amounts of H200 products for China-based customers were approved by the US government, we have yet to generate any revenue, and we do not know whether any imports will be allowed into China. Our competitors in China, bolstered by recent IPOs, are making progress and have the potential to disrupt the structure of the global AI industry over the long term. To sustain its leadership position in AI compute, America must engage every developer and be the platform for choice for every commercial business, including those in China. We will continue to engage with the US and China governments and advocate for America's ability to compete around the world. We unveiled the Rubin platform last month at CES, comprised of 6 new chips: the Vera CPU, Rubin GPU, NVLink 6 switch, ConnectX-9 SuperNIC, Bluefield 4 DPU, and Spectrum 6 Ethernet switch. The platform will train MOE models with 1/4 the number of GPUs and reduce inference token costs by up to 10x compared to Blackwell. We shipped our first Vera Rubin samples to customers earlier this week, and we remain on track to commence production shipments in the second half of the year. Based on its modular, cable-free tray design, Rubin will deliver improved resiliency and serviceability relative to Blackwell. We expect every cloud model builder to deploy Vera Rubin. Moving to gaming. Gaming revenue of $3.7 billion increased 47% year-on-year, driven by strong Blackwell demand and improved supply. GeForce RTX is the leading platform for PC gamers, creators, and developers. In Q4, we added several new technologies and advancements, including DLSS 4.5, which uses AI to bring game visuals to a new level. G-Sync Pulsar, bringing incredible clear graphics even in motion, and 35% faster LLM inference across leading AI PC frameworks. Looking ahead, while end demand for our products remains strong and channel inventory levels are healthy, we expect supply constraints to be the headwind to gaming in Q1 and beyond. For professional visualization, it crossed the 1 billion mark for the first time, with revenue of 1.3 billion, up 159% year-over-year and 74% sequentially. During the quarter, we launched the RTX Pro 5000 Blackwell workstation with 72 gigabytes of fast memory for AI developers running LLMs and agentic workflows. Automotive revenue of $604 million was up 6% year-over-year and was driven by robust demand for self-driving solutions. At CES, we introduced Alpamayo, the world's first open portfolio of reasoning, vision, language, action models, simulation blueprints, and datasets enabling vehicles that can think. The first passenger car featuring Alpamayo, built on NVIDIA Drive, will be on the road soon in the new Mercedes-Benz CLA. Physical AI is here, having already contributed north of $6 billion in NVIDIA revenue in fiscal year 2026. Robotaxi rides are growing exponentially with commercial fleets from Waymo, Tesla, Uber, WeRide, and Zoox. And many others are expected to scale from thousands of vehicles in 2025 to millions over the next decade, creating a market poised to generate hundreds of billions of dollars of revenue. This expansion will demand orders of a magnitude more compute, with every major OEM and service provider developing on NVIDIA's platform. We continue to advance robotics development with the new NVIDIA Cosmos and Isaac Group, open models, frameworks, and NVIDIA's powered robots and autonomous machines for leading companies, including Boston Dynamics, Caterpillar, Franco Robotics, LG Electronics, and Neuro Robotics. To accelerate industrial physical AI adoption, we also announced new expanding partnerships with Dassault Systems, Siemens, and Synopsys to bring NVIDIA AI infrastructure, Omniverse digital twins, world models, and CUDA-X libraries to millions of researchers, designers, and engineers building the world's industries. Let's move to the rest of the P&L. GAAP gross margin was 75%, and non-GAAP gross margin was 75.2%, increasing sequentially as Blackwell continued to ramp. GAAP operating expenses were up 16% sequentially and up 21% on a non-GAAP basis related to new product introductions and compute and infrastructure costs. Non-GAAP effective tax rate for the fourth quarter was 15.4%, below our outlook for the quarter, primarily due to the impact of a one-time tax benefit. Inventory grew 8% quarter-over-quarter, while purchase commitments also increased significantly, as we have strategically secured inventory and capacity to meet demand beyond the next several quarters. This is further out in time than usual and reflects the longer demand visibility we have. While we expect tightness in the supply for our advanced architectures to persist, we remain confident in our ability to capitalize on the growth opportunity ahead with our scale, expansive supply chain, and the long-standing partnerships continuing to serve us well. We generated free cash flow of $35 billion in Q4 and $97 billion in fiscal year 2026. For the year, we returned $41 billion, or 43% of free cash flow, to our shareholders in the form of share repurchases and dividends. We continue to invest in our technology and our ecosystem to cultivate market development, drive long-term growth, and ultimately yield total shareholder returns superior to the market or our peer group. Importantly, we will continue to run a strategic and disciplined process as it relates to our investments, and we remain committed to returning capital to our shareholders. Let me turn to the outlook for the first quarter. Starting this quarter, we will be including stock-based compensation expense in our non-GAAP results. Stock-based compensation is a foundational component of our compensation program to attract and retain world-class talent. Let me first start with revenue. Total revenue is expected to be $78 billion, plus or minus 2%. We expect most of our growth to be driven by data center. Consistent with last quarter, we are not assuming any data center compute revenue from China in our outlook. GAAP and non-GAAP gross margins are expected to be 74.9% and 75%, respectively, plus or minus 50 basis points. For the full year, we continue to see gross margins in the mid-70s. We will keep you updated on our progress as we prepare for the Vera Rubin transition. GAAP and non-GAAP operating expenses are expected to be approximately $7.7 billion and $7.5 billion, respectively, including stock-based compensation expense of $1.9 billion. For the full year, we expect non-GAAP operating expenses to grow in the low 40s on a year-over-year basis as we continue to invest in our expanding opportunity set. For the full year, fiscal year 27, we expect GAAP and non-GAAP tax rates to be in between 7 and 19%, excluding any discrete items and material changes to our tax environment. With that, let me turn the call over to Jensen. I think he has a few words for us.
This quarter, we significantly deepened and expanded our partnerships with leading frontier model makers. We recently celebrated OpenAI's launch of GPT 5.3 Codex, trained with and inferencing on Grace Blackwell NVLink 72 systems. GPT 5.3 Codex can take on long-running tasks that involve research, tool use, and complex execution. 5.3 Codex is deployed broadly inside NVIDIA. Our engineers love it. We continue to work with OpenAI toward a partnership agreement and believe we are close. We are thrilled with our ongoing partnership with OpenAI, a once-in-a-generation company we've had the pleasure of partnering with since their first days. Meta Superintelligence Labs is scaling up at lightning speed. Last week, we announced that Meta is deploying millions of Blackwells and Rubin GPUs, NVIDIA CPUs, and Spectrum-X Ethernet for training and inference. This quarter, we announced a partnership with Anthropic and a $10 billion investment in their company. Anthropic will train and inference on Grace Blackwell and Vera Rubin systems. Anthropic's Claude Codework agent platform is revolutionary and has opened the floodgates for enterprise AI adoption. Between Claude Codework and OpenClaw, compute demand is skyrocketing, and ChatGPT moment of agentic AI has arrived. With partnerships spanning Anthropic, Meta, OpenAI, and xAI, NVIDIA deployed across every cloud, and with our ability to build full-stack AI infrastructure from the ground up or support them in the cloud. We're uniquely positioned to partner with frontier model builders at every stage: training, inference, and AI factory scale-out. Finally, we recently entered into a non-exclusive licensing agreement with Grok for its low-latency inference technology and welcomed a team of brilliant engineers to NVIDIA. As we did with Mellanox, We will extend NVIDIA's architecture with Grok's innovations to enable new levels of AI infrastructure performance and value. We look forward to sharing more at GTC next month. Okay, back to you.
We will now transition to Q&A. Operator, please poll for questions.
At this time, I would like to remind everyone, in order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster. Your first question comes from Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. I think you mentioned that you now have growth visibility into calendar 27 also, and I think your purchase commitments kind of reflect that confidence. But Jensen, I'm curious, when you look at your top cloud customers, cloud CapEx close to $700 billion this year, many investors are concerned that it would be harder for this level to grow into next year. And for several of them, their cash flow generation capability is also getting compressed. So I know you're very confident about your roadmap, right, and your purchase commitments and whatnot, but how confident are you about your customers' ability to continue to grow their CapEx? And if their CapEx doesn't grow, can NVIDIA still find a way to grow in that envelope? Thank you.
I am confident in their cash flow growing. And the reason for that is very simple. We have now seen the inflection of agentic AI and the usefulness of agents across the world in enterprises everywhere. You're seeing incredible compute demand because of it. In this new world of AI, compute is revenues. Without compute, there's no way to generate tokens. Without tokens, there's no way to grow revenues. So in this new world of AI, compute equals revenues. And I am certain that at this point, with the productive use of Codex and Claude Code and the excitement around Claude Cowork and just the incredible enthusiasm about OpenClaw and the enterprise versions of them. All of the enterprise ISVs who are now working on agentic systems on top of their tools platforms. I'm certain at this point that we are at the inflection point. We've reached the inflection point, and we're generating profitable tokens that are productive for customers and profitable for the cloud service providers. And so the simple logic of it, the simple way to think about it is computing has changed. What used to be software running on computers, modest amount of computers, call it $300 or $400 billion worth of CapEx each year, has now gone into AI. And AI, in order to generate tokens, you need compute capacity. And that translates directly to growth, and that translates directly to revenues.
Your next question comes from Joe Moore with Morgan Stanley. Your line is open.
Great, thank you, and congratulations on the numbers. You talked about some of the strategic investments that you've made into Anthropic and potentially OpenAI, CoreWeave as well, but also partners, Intel, Nokia, Synopsys. You're clearly at the center of everything. Can you talk about the role of those investments and kind of how do you view the balance sheet as a tool to kind of grow NVIDIA's position in the ecosystem and participate in that growth?
As you know, fundamentally at the core of everything NVIDIA is our ecosystem. That's what everybody loves about our business. The richness of our ecosystem. Just about every startup in the world is working on NVIDIA's platform. We're in every cloud. We're in every on-prem data center. We're all over the world's edge and robotic systems. Thousands of AI natives are built on top of NVIDIA. We want to take the great opportunity that we have as we're in the beginning of this new computing era, this new computing platform shift, to put everybody on NVIDIA. Everything is already built on CUDA, and so we're starting from a really terrific starting point. But as we build out the entire AI ecosystem, whether it's in AI for language or physical AI or AI physics or biology or robotics or manufacturing, we want all of these ecosystems to be built on top of NVIDIA. And this is such a wonderful opportunity for us to invest into the ecosystem across the entire stack. Our ecosystem is also richer today than it used to be. We used to be largely a computing platform on GPUs, but now we're a computing AI infrastructure company, and we have computing platforms on, well, every aspect of that. And everything from computing to AI models to networking to our DPU, all of that has computing stacks on top of it. And as I mentioned before, whether it's in enterprise or in manufacturing, industrial, or science or robotics, each one of these ecosystems have different stacks. And we want to make sure that we continue to invest into our ecosystem. So our investments are focused very squarely, strategically on expanding and deepening our ecosystem reach.
Your next question comes from Harlan Sur with JP Morgan. Your line is open.
Good afternoon. Thanks for taking my question. Networking continues to rise as a percentage of your overall data center profile, right? Through fiscal 26, your networking revenues accelerated on a year-over-year basis every single quarter, right? With 3.6x growth, as you guys mentioned, year-over-year growth in Q4. Obviously, on the strength of your scale-up and scale-out networking product portfolio, I would seem to remember that first half of last year, your annualized run rate on your Spectrum-X Ethernet switching platform was around 10 billion annualized. It looks like that may have stepped up to around 11, 12 billion in the second half of last year. Jensen, looking at your order book, especially with Spectrum-X GS, upcoming 102T Spectrum-6 switching platforms launching soon, where is the Spectrum run rate trending now, and as you foresee exiting sort of this calendar year?
Yeah, as you know, we see ourselves as an AI infrastructure company, and the AI computing infrastructure includes CPUs, GPUs, and we invented NVLink to scale up the one computing node into a giant computing rack. We invented the idea of a rack scale computer. We don't ship nodes of computers, we ship racks of computers. And that NVLink switch scale up system is then scaled out using Spectrum-X and InfiniBand. We support both. And then further, we also scale across data centers using Spectrum-X scale across. And so the way we think about networking is really an extension. We offer everything openly so that people could decide to mix and match in different scale and however they would like to integrate it into their bespoke data center. But in the final analysis, it's all one big part of our platform. And the invention of NVLink really turbocharged our networking business. Every rack comes with 9 nodes of switches, and each one of them has 2 chips in it, and in the future they'll have more. And so the amount of switching that we do per rack is really quite incredible. We're also now the largest networking company in the world. And if you look at Ethernet, we came into the Ethernet market about a couple of years ago into Ethernet switching. And I think that we're probably the largest Ethernet networking company in the world today, and surely will be soon. And so Spectrum-X Ethernet has been a home run for us. But we're open to however people want to do networking. Some people just really love the low latency and the scale-up capability of InfiniBand, and we will continue to support that, of course. And some people love to integrate their networking across their data center based on Ethernet. And we created an Ethernet capability that extends Ethernet with artificial intelligence way of processing in the data center, and we're incredibly good at that. And our Spectrum-X performance really shows it. The difference of when you built a $10 billion or $20 billion AI factory, the difference of 10%, and it could be easily 20% on the effectiveness and the utilization of your network for your data center, that translates to real money. And so NVIDIA's networking business is really, really growing fast. And it's, I think it's just because we we built the AI infrastructure so effectively, and the AI infrastructure business is growing incredibly fast.
Your next question comes from CJ Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. I guess with CPX for large context windows and Grok likely adding a decode-specific solution, curious how we should think about your future roadmap. Should we be thinking about customized silicon either by workload or customer as an increasing focus by NVIDIA, particularly helped by your move to a dielet architecture? Thanks so much.
Everybody should want to push out dielet as long as they can. And the reason for that is because every time you cross a dielet, you have a dielet, you have to cross an interface. Every time you cross an interface, you add latency, you add power unnecessarily. We're not allergic to dielet. We use dielets already, but we try to use dielets only when we absolutely have no choice but to do so. And so if you look at the Grace Blackwell architecture and the Rubin architecture, we use 2 giant reticle limited dies and we abut them. And that reduces the amount of architecture crossing. The dielet tax shows up in the architecture effectiveness of the competitors. If you look at NVIDIA, people call it our software advantage. But where software starts and architecture starts and ends is kind of hard to tell. It's, our software is effective because our architecture is so good. And so the CUDA architecture is unquestionably more effective, more efficient, delivers more performance per flop, per watt than any computing architecture out there. And it's because of the way we architect. With respect to how we think about Grok and the low latency decoder, I've got some great ideas that I'd like to share with you at GTC. But the simple idea is that our infrastructure is incredibly versatile because of CUDA, and we're going to continue to do that. All of our GPUs are architecturally compatible, which means that when I'm working on optimizing models today for Blackwell, all of that work and all of that dedication to optimizing software stacks and new models also benefit Hopper and also benefit Ampere. It's the reason why A100 continues to feel fresh and continues to stay performant years after we've deployed it into the world. Architecture compatibility allows us to do that. It allows us to invest enormously in software engineering and optimization, knowing that our entire install base in the cloud, on-prem, everywhere, from generations of architectures of GPUs will all benefit. And so we'll continue to do that, and allows us to extend the useful life, allows us to have innovation, flexibility, and velocity, which translates to performance, and very importantly, performance per dollar and performance per watt for our customers. And so what we'll do with Grok is you'll come to see GTC, but what we'll do is we'll extend our architecture with Grok as an accelerator in very much the ways that we extended NVIDIA's architecture with Mellanox.
The next question comes from Stacy Rasgon with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. Colette, I wanted to dig a little bit into the call for sequential growth through the year. So, I mean, you grew this quarter more than $10 billion sequentially in data center, and the guide seems to imply, the bulk of the increased $10 billion sequential in data center. So, how do you see that as we go through the year, especially as Rubin ramps into the back half? Blackwell's been a pretty massive acceleration for sequential growth. Should we expect something similar as we get to Rubin? And then I was also just hoping you could comment on your expectations for gaming. I understand the memory issues and everything else. Do you think gaming can still grow year over year in fiscal 27, or will that be under more pressure given memory? So those 2 questions, please. Thank you.
Thanks, Stacy. Let me start with the revenue going forward. Again, we're trying to look at revenue quarter by quarter. As you think about the full year, we are absolutely going to be still selling and providing Blackwell, probably at the same time that we're also seeing Vera Rubin come to market. This is a very great architecture that helps them just today quickly standing up and have already planned on many different orders across the different customers to provide that. It's too early yet to determine how much in terms of that Vera Rubin, that beginning ramp will start in the second half, and we'll get through it. But no confusion in terms of the strong demand and the interest. We do expect pretty much every single customer to be purchasing Vera Rubin. The question is, how soon are we in market, and how soon are they able to stand that up in terms of in their data centers? That was your first part. The second part was focusing on our gaming. As much as we would love to have more supply, we do believe for a couple quarters, it is going to be very tight. If things improve by the end of the year, there is an opportunity to think about what that is from a year-over-year growth. But it's still too early for us to know at this time, and we'll get back to you as soon as we can.
Your next question comes from Atif Malik with Citi. Your line is open.
Thank you for taking my question. Jensen, I'm curious if you can touch on the importance of CUDA, as now more of the investment dollars in AI are coming from inference workloads.
Oh, without CUDA, we wouldn't know what to do with inference. The entire stack from TensorRT LLM that we introduced a few years ago, which is still the most performant inference stack in the world, optimizing it for NVLink requires us to discover and invent new parallelization algorithms that sits on top of CUDA to distribute the workload and the inferencing to take advantage of the aggregate bandwidth across NVLink 72. NVLink 72 has enabled us to deliver generationally 50 times more performance per watt. It's just an incredible leap, and it's sensible. NVLink 72 is a great invention. It was hard to do. The creation of the switching technology, disaggregating the switches, building the system racks, all of that, we did it all in plain sight, and everybody knew how hard it was for us to do. And but the results are incredible. So performance per watt is 50 times, performance per dollar 35 times, and so the leap in inference is incredible. It's very important. It's really important to realize that inference equals revenues now for our customers, because agents are generating so many tokens, and the results are so effective. When the agents are coding, it's off generating thousands, tens of thousands, hundreds of thousands, because they're running for minutes to hours. And so these systems, these agentic systems, are spawning off different agents working as a team. The number of tokens that are being generated is really, really gone exponential. And so we need to inference at a much higher speed. And when you're inferencing at a much higher speed, and each one of those tokens are dollarized, it directly translates into revenues. And so inference performance equals revenues for our customers. For the data centers, inference tokens per watt translates directly to the revenues of the CSPs. And the reason for that is because everybody is power limited. And so, no matter how many data centers you have, each data center, 100 megawatts or 1 gigawatt has power limits. So the architecture that has the best performance per watt translates, because each token, the performance tokens per watt, each token is dollarized. Tokens per watt translates to dollars per watt, which translates in a gigawatt directly to revenues. And so you could see that every CSP understands this now, every hyperscaler understands this, that CapEx translates to compute. Compute with the right architecture translates to maximizing revenues, and compute equals revenues. Without investing capacity today, without investing in compute, there cannot be revenue growth. And that I think everybody understands. Compute equals revenues, choosing the right architecture is incredibly important. It's more than strategic now. It directly affects their earnings. And choosing the right architecture, the one with the best performance per watt, is literally everything.
Your next question comes from Ben Reitzes with Melius Research. Your line is open.
Yeah, hey, thanks. First, let me say kudos on including the stock comp in non-GAAP. I think that's a great move, but that isn't my question. My question's around gross margins and the sustainability of the mid-70s long term. Should we read into the visibility on supply being available into calendar 27 that it's sustainable until then? And then, Jensen, what about after that? Are there innovations in memory consumption you can unveil that makes us feel better about the ability to keep margins at that level for a long time? Thanks.
The single most important lever of our gross margins is actually delivering generational leaps to our customers. That is the single most important thing. If we could deliver generationally performance per watt that exceeds dramatically what Moore's Law can do, if we can deliver performance per dollar dramatically more than the cost of our systems, than the price of our systems, then we can continue to sustain our gross margins. That's the simple, most important concept. The reason why we're moving so fast is because, number one, the demand for tokens in the world as a result of the inflection points that we've gone through has gone completely exponential. I think we're all seeing that, to the point where even our 6-year-old GPUs in the cloud are completely consumed and the pricing is going up. And so we know that the amount of computation necessary, the amount of compute necessary for the modern way of doing software is growing exponentially. And so our strategy is to deliver an entire AI infrastructure every single year. This year, we introduced 6 new chips. Rubin next generation will do many new chips as well. And every single generation, we are committed to deliver many X factors of performance per watt and performance per dollar. And that pace and our ability to do extreme co-design allows us to deliver that value and that benefit to the customers. And that is the single most vital thing as it relates to our value delivered.
Your next question comes from Antoine Chkaiban with New Street Research. Your line is open.
Hi, thanks a lot for taking my question. I'd like to ask about space data centers, which some of your customers are considering. How feasible do you think that is, and on what kind of horizon? And what do the economics look like today, and how do you think that could evolve over time? Thank you.
Well, the economics are poor today, but it's going to improve over time. As you know, the way that space works is radically different than how it works down here. There's an abundance of energy, but solar panels are large, but there's plenty of space in space. The heat dissipation, it's cold in space. However, there's no airflow, and so the only way to dissipate heat is through conduction. And the radiators that you need to create are fairly large. Liquid cooling is obviously out of the question because it's heavy and freezes, and so the methods that we use here on Earth are a little different than the way we would do it in space. But there are many different computing problems that really wants to be done in space, and so Nvidia is already the world's first GPU in space. Hopper is in space, and one of the best use cases of GPUs in space is imaging, to be able to image at extremely high resolutions using of course optics and artificial intelligence, and to be able to do that computation of reprojection of different angles, and be able to up-res and do noise reduction, and just be able to image at very large very high resolutions, extremely large scales, and very, very fast. It's hard to do that by sending petabytes and petabytes of imaging data back here on Earth and doing that work. It's easier just to do it out in space, and then ignore all of the data collected and processed until you see something interesting. And so, artificial intelligence in space will have very good, very interesting applications.
Your next question comes from Mark Lipacis with Evercore ISI. Your line is open.
Hi, thanks for taking my question. I want to pick up with the comment you made on the script about revenue diversification. I believe, Colette, you said that hyperscalers were over 50% of revenues, but growth was led by the rest of your data center customers. And as a clarification, I just want to make sure I understood that. Does that imply your non-hyperscale customers grew faster? And if so, can you help us understand what are the non-hyperscalers doing different? Are they doing different things than the hyperscalers, or are the same things on a different scale? And do you expect this trend to continue? Would you expect your customer base to evolve to a point where non-hyperscalers become a bigger part of your the larger part of your business? Thank you.
Yes, let's see if we can help on this question. So when you think about our top 5, as we articulated as being our CSPs, our hyperscalers, and they have right now sat at about 50% of our total revenue. There's a big organization, therefore, of diversity of all different other types of companies that we are working with. That it goes through our AI model makers, that goes through our enterprises, that goes to supercomputing, it goes to our sovereigns. There's a lot of other different facts on there, but you are correct. It's a very fast-growing area as well. We have a strong position in terms of all of our different cloud providers on our platform, and now we also have an extreme diversity of different customers that we are seeing all the way across the world. And this will really benefit seeing that diversity and being able to serve all of those parts. Let me see if Jensen wants to add a bit more.
Yeah, this is one of the advantages that we have with our ecosystem, all built on top of CUDA. We're the only accelerated computing platform that is in every cloud, that's available through every single computer maker, available at the edge, and we're now cultivating telecommunications. Obviously, the future radios will all be AI-driven radios, and the future wireless network will also be a computing platform. That is a foregone conclusion, but somebody has to go and invent the technologies to make that possible. And we created a platform called Ariel to go do that. We're out in just about every single robot, every single self-driving car. Our ability, CUDA's ability, to have the benefit of the performance of specialized processors on the one hand, with the tensor cores inside our GPUs. On the other hand, the flexibility of CUDA allows us to solve language problems, computer vision problems, robotics problems, to biology problems, physics problems, and just about all kinds of AI and all kinds of computation algorithms. And so the diversity of our customer base is one of the greatest strengths that we have. The second thing, of course, is without our own ecosystem, even if our processor was programmable, if we didn't cultivate our ecosystem, and talking about some of the things that we're doing today, investing in our future ecosystem and continue to enhance our ecosystem. Without our ecosystem, it's hard for us to grow beyond what design wins we capture for somebody else's ecosystem. And so we could grow and expand our ecosystem very naturally because of our the platform that we created. And then lastly, one of the things that's really important is the partnerships that we have with OpenAI and Anthropic, with xAI, with Meta, now makes, and of course, just about every single open source in the world. There's 1.5 million AI models on Hugging Face. All of it runs on NVIDIA CUDA. And so an open source in totality probably represents the largest, it's the second largest model in the world. OpenAI is the largest. Second largest is probably all the collection of all the open sources. And so NVIDIA's ability to run all of that makes our platform super fungible, super easy to use, and really safe to invest into. And so that creates the diversity of customers and the diversity of the platforms and available in every single country, and because we support the whole world's ecosystem.
Your next question comes from Aaron Rakers with Wells Fargo. Your line is open.
Yeah, thanks for taking the question. I guess, sticking with the idea of the platform and extreme co-design, some of the news over this last quarter has obviously been NVIDIA's ability or push to bring Vera CPUs to market on a standalone solution basis. So I guess, Jensen, I'm curious of what's the importance that Vera plays in this architecture evolution as we move forward? Is this being driven more by the proliferation or the heterogeneity of inference workloads? I'm just curious of how you see that evolving for NVIDIA, particularly on a standalone CPU basis. Thank you.
Yeah, thanks. And I'll tell you some more about it at GTC. But at the highest level, we made fundamentally different architecture decisions about our CPUs compared to the rest of the world's CPUs. It's the only data center CPU that supports LPDDR5. It is designed to be focused on very high data processing capabilities, and the reason for that is because most of the computing problems that we're interested in are data driven, artificial intelligence being one, and the single threaded performance in this ratio with bandwidth is just off the charts. And we made those architectural decisions because in the entire phase, the different phases of AI, from data processing, before you even do training, you have to do data processing. So you have data processing, pre-training, and in post-training now, the AIs are learning how to use tools. And the usage of tools, many of those tools run in CPU-only environments, or they run in CPU with GPU-accelerated environments. And Vera was designed to be an excellent CPU for post-training. And so some of the use cases in the entire pipeline of artificial intelligence includes using a lot of CPUs. We love CPUs as well as GPUs, and when you accelerate the algorithms to the limit as we have, Amdahl's law would suggest that you need really, really fast single-threaded CPUs, and that's the reason why we built Grace to be extraordinarily great at single-threaded performance, and Vera is off the charts better than that.
Your next question comes from Tim Arcuri with UBS. Your line is open.
Thanks a lot. Colette, I was wondering if you can talk about the deployment of capital. I know that you really jacked up the purchase commits, but it sounds like maybe you're over the hump on this, and you're going to probably generate about $100 billion in cash this year. So, and pretty much no matter how good the results have been, the stock hasn't really gone up much. So I would think that you probably feel like this is a pretty good price to be buying back a bunch of it here. So I was wondering if you can talk about that. Question being, why not put a big stake in the ground and just have a huge share repo here? Thanks.
So thanks for the question. We look at our capital return very, very carefully, and we do believe that one of the most important things that we can do is really supporting the extreme ecosystem that's in front of us, that stems from everywhere, from our suppliers and the work that we need to do to assure that we can have the supply that's needed and help them from a capacity, all the way that we are in terms of the early developers of the AI solutions that will be on our platform. So we will continue to make this a very important part of our process and strategic investments. But of course, we are still repurchasing our stock. We are still with our dividend as well. And we will continue to find the right unique opportunities within the year for doing those different purchases.
Your final question comes from Jim Schneider with Goldman Sachs. Your line is open.
Thank you for taking my question. Jensen, you've previously outlined the potential to get to 3 to 4 trillion of data center capex by 2030, which implies a potential acceleration in growth rates, which you've sort of guided to this, at least this next quarter. The question is, what are some of the key application areas that you believe are most likely to drive that inflection? Is that physical AI, agentic, or something else? And do you still feel good about that $3 to $4 trillion envelope? Thank you.
Yeah, let's back that up and just reason through it from a few different ways. So the first way is on first principles, the way that software is done in the future using AI is token driven. And I think everybody talks about tokenomics and talks about data centers generating tokens, and inference is about generating tokens. And we generate tokens. We were just talking about tokens, how NVIDIA's NVLink 72 enabled us to generate tokens at 50 times better performance per unit energy than the previous generation. And so token generation is at the center of almost everything that relates to software in the future and relates to computing. If you look at the way we use computing in the past, however, the amount of computation demand for software in the past is a tiny fraction of what is necessary in the future. And AI is here. AI is not going to go back. AI is only get better from here. And so if you think about it, and you said, okay, well, the world was investing about $300 to $400 billion a year in classical computing, and now AI is here, and the amount of computation necessary is 1,000 times higher than the way we used to do computing. The computing demand is just a lot higher. And so if we continue to believe there's value in it, and we'll talk about that in a second, then the world will invest to produce that token. And so the amount of token generation capability that the world needs is a lot more than $700 billion. And I'm fairly confident that we're going to continue to generate tokens. We're going to continue to invest in compute capacity from this point out. And fundamentally, because every single company depends on software, every software will depend on AI. And so every company will produce tokens. And that's the reason why I call them AI factories. And whether you're a company in the cloud data centers, you have AI factories to generate tokens for your revenues. If you're an enterprise software company, you're going to generate tokens for the agentic systems that are on top of your tools. If you are a robotics factory, and self-driving cars, first indication of that, you have huge supercomputers, which are basically AI factories, to generate tokens that goes into your cars, that becomes its AI. And then you also have to put computers inside the cars to continuously generate tokens. And so we're fairly sure now that this is the future of computing. Now, why is it so certain that this is the future of computing? And the reason for that is because the way we used to do software was pre-recorded. Everything was captured a priori. We pre-compile the software, we pre-write the content, we pre-record the videos. But now everything is generative in real time. And when it's generated in real time, it can take into context of the person, the situation, the query, and the intentions could all be taken into consideration to generate the outcome of this new software we call AI, agentic AI. And so the amount of computation necessary is far, far greater than pre-recorded. Just as a computer has a lot more computation capability than a DVD recorder, a DVD player that was pre-recorded, artificial intelligence needs a lot more computing capability than the way we used to do software in the past. Now, the question about computation, about sustainability, at the first level is just at the computer science level. This is the way computing is going to be done. Now, from an industrial level, because all of our companies in the final analysis are powered by software, and the cloud companies are powered by software, and if the new software requires tokens to be generated, and the tokens are monetized, then it stands to reason that their data center build-out directly drives their revenues. And so compute drives revenues. And I think they all understand that. I think people are increasingly starting to understand that as well. And then lastly, the benefits that AI produces for the world ultimately has to generate revenues. And we're seeing right in front, right being developed as we see, as we stand here, agentic AI has turned an inflection point. And it literally happened in the last couple of 2-3 months. Of course, inside the industry, we've been seeing it for a while, probably 6 months or so. But the world is now awakened to the agentic AI inflection. The agents are super smart. They're solving real problems. Coding is obviously supported by agentic systems now. And all of our coders here at NVIDIA are using agentic systems, either Cloud Code or OpenAI Codex, enormously to, and oftentimes both, and Cursor, oftentimes all three, depends on the use case. But they have agents and design partners, engineering partners to help them solve problems. And you could see their revenue skyrocketing. These companies, in the case of Anthropic, I think their revenues 10x in a year. And they are severely capacity constrained because demand is just incredible. And the token demand is incredible. The token generation rate is growing exponentially. And the same thing with, of course, OpenAI. Their demand is incredible. And so the more compute that they can stand online, bring online, the faster their revenues will grow. And that goes back to the comment that I was saying, that inference is revenues, that compute equals revenues now in this new world. And in a lot of ways, that's the reason why we say it's a new industrial revolution. There are new factories, new infrastructure being built, and this new way of doing computing is not going to go back. And so to the extent that we believe that producing tokens is going to be the future of computing, which I believe, and I think largely the industry believes, then we're going to be building out this capacity from this point forward and continue to expand from here. Now, the thing that is the wave that we're seeing now is the agentic AI inflection. And the next inflection beyond that is physical AI, where we take AI and these agentic systems into the physical applications, such as manufacturing, such as robotics. And so that's a giant opportunity ahead. Okay.
This concludes the question and answer session. I'll turn the call to Tushar Chande.
In closing, please note Jensen will be participating in a fireside chat at the Morgan Stanley TMT conference in San Francisco on March 4th. He'll also be